What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. I know I have not made an update in about a week. The reason is because there's really not much to talk about. You know, I could make videos every day talking about every little price move. I figured today was a good day to make the update because now that we've had this Bitcoin, price movement to the downside, everyone's freaking out. All the bears, they're coming out again, right? This is it. That was the top. It's over. We all got fooled. Well, before we get into the video, I just want to say we all got fooled. Just so you guys know, this is one of the most pathetic retail bull runs I've ever seen. Like, if you think that this is crypto mania, no, this is not crypto mania. In fact, this has been the quietest bull run I've actually pretty much ever participated in. It's mostly just being retail driven right now. Now, you might say to yourself, well, doesn't that mean more manipulation? They don't care about price. That means they're probably shorting it. I've even heard some people saying that Blackrock is shorting the markets right now. I'm going to get into that at the end of this video and explain why that is probably one of the most ridiculous theories. And I'm a conspiracy theorist myself, but that is a ridiculous idea. But what I do want to talk about is specifically what is happening in the charts today. And I'm going to make this video super quick, super short. I don't want to waste anybody's time. And hopefully by the end of this video, if you are still here, you'll understand that while everyone is out panicking, there is tons of evidence to show us that the big guys are in fact accumulating and that this bull run is not actually over. Now, it may not feel that way. It may feel like it's boring. It may feel like it's over. It may feel like, this is the end of the world. But I think if you watch this video all the way to the end, you'll understand why, honestly, this is really just that chop to hunt out those leverage plays and really just mess with the little guys. So without further ado, guys, let's hop right in. We're going to go straight to the charts. Super short video today. If you guys do like videos like this, slap a like, drop a comment below. It does help to spread, these shorter videos. So let's hop in. So we could see here in typical fashion that when Bitcoin takes a hit, you could see down about 4.73% in the past 24 hours. Most of the altcoins get hit even harder, as you could see here with these deeper reds. This is very, very common. When Bitcoin falls, people panic. If they're in altcoin positions, you tend to see these altcoins get hit even harder. But, just sticking on the Bitcoin chart today, what we had was we had broken out of this falling wedge pattern. But really, if you just have a look, the only thing that's happening is we are still just trapped in this giant range. Yes, you could say, oh, well, we had this ascending trend, but we did fall out of it. Well, you could also say that we had that back here. So people that were freaking out about this fall from, about 72 all the way down to 56, you could argue that possibly that's exactly what is happening right now. But I know what you're asking yourself. Okay, I get it. Bitcoin's still range bound. It could just bounce between 61 and 71 potentially. But what about the fact that the S&P is making all-time highs while Bitcoin is not seeming to follow? There's always that conspiracy. Is Blackrock shorting, right? Well, I'll again get to that at the end of the video. But one of the most logical reasons for this happening is simply open interest. And there are a lot of people who are trading on leverage. As the price starts to increase, you get people getting extremely bullish. And then as price starts to fall, people get bearish. They pile on their shorts, right? And you can see some of these areas of interest down here. Of course, as you zoom in, these levels will change. I'm just zooming out and having a look at the monthly just to make it a little easier. And you could see, I wish I actually had the chart pulled up previously, but there was a lot of, interest down in these areas. And basically, unfortunately, what happens is markets tend to, punish these over leveraged traders. So this area down here, you could see specifically around 65,000 to around 64,000. There's a lot of area of interest that would end up liquidating some of those longs. However, on the flip side, if we look up at this hot guy right here, we do have a lot at around 73,000, which should suggest that we would eventually end up punishing those shorts as well, because we've seen a lot of the institutions, not a lot of them, but we have noticed that they have started ramping up their shorts. And we do know that at some point you are going to get a squeeze, a short squeeze in particular. But let's just have a look at the structure of this chart right here. Yeah, you could say right here, things were getting pretty heated, things were getting pretty bullish, and yet we've fallen back down. However, if we just have a simple look at this parallel channel right here, we are still putting in higher highs and higher lows on the macro. Even if Bitcoin, for example, was to fall straight down here to honestly around $59,000, you would still say that we're putting in a constructive pattern. And yes, of course, on the daily, we have seen some of the money flow become a little bit stagnant. This is actually something that is quite common in the summertime. Why? It could just be the psychology of traders. You know, summertime is for relaxing. People are on vacation. They're enjoying themselves. And you don't really necessarily see those crazy summertime moves, right? If you look back historically, sometimes it can be a little bit of a boring time. And, you know, for people that are saying that's it, we're looking for a 50% crash, I'm just going to be the one to say that that is probably not going to happen. Could it happen? Of course, I'm not Nostradamus, but the likelihood is not very possible, or not very likely, I should say, because as you guys can see right here, look at this massive candle that was bought up right here back in basically the last week of April, right? So Bitcoin had fallen about 11% from this area, which is actually even a bigger dip than what we're seeing today, by the way. And look at how that wick got bought back up and actually ended up pumping price up about 28%. That is massive buying. And you can see every time, you know, we go down into these dips, someone is buying. Who do you think is buying? Well, I can tell you right now, I speak to a lot of people behind the scenes in the industry, and these ETFs will continue to buy these dips. I'll explain at the end of the video why it makes no sense for Blackrock to be shorting Bitcoin at this moment. But if you did want to have a retest of that area, which by the way, you could argue was a very important resistance back here between February, back in 2021 all the way through May of 2021, well, we may just have to retest that area again. But once again, that would really only suggest around a $57,000 Bitcoin. Now, if you're thinking we're going to have some kind of a massive price move, well, then I guess we could go all the way back to this major trend. But again, the odds of us falling straight down are not likely. Even if we had a fake out, bounced around, retested this area right here, which is around the 0.786, bounced around, faked out. Yeah, okay, maybe we come and test this line, but when would that happen? Would that end up happening all the way at the end of the year? Because obviously these markets are designed to take money from the impatient and transfer it to the patient. And you can tell that a lot of people are getting bored right here. They're thinking that this is the end. They're thinking that this is the top. But guys, you gotta zoom out. You know how many people thought the same thing down here? And this range lasted even longer. Look, this range, okay, arguably lasted about 217 days, whereas the range that we're in right now has only lasted about 98 days. And look what this did right here. We got support on that line and we bounced back up again. So is that $57,000 area out of the cards? It's not out of the cards, but if you do believe that we are in a bull market, which I believe at this point it should be pretty dead obvious that we are. There's multiple things pointing towards it. You have, look at this massive money flow that we had all the way back here. We haven't even gotten to that level yet. That peaked at around 51. This market has only peaked at around 34 right now, okay? So this is obviously just emotions, and you could see that once we get supported on these weekly EMA ribbons, the worst case scenario is coming down to the 89, and that usually does signal that we're probably at the end of the bear market. But for the most part, we might dance on it, we might use it as support, but we tend to stay above it for a very long time. It's only once we start to, muddle around in the middle that we start to get that concern. Now, I'm not, gonna say anything, but what do you guys see? What are you guys seeing right now? Well, we're seeing massive support at the top of the EMA. We're seeing massive support at the top of the EMA. Well, where is that level today? That level is sitting at around 61,000. So yeah, there could be a possibility that somebody's waiting for this dip down here, but ultimately everything is still showing us massive bullish structure. And you might be saying, oh, well, the RSI is oversold. Yeah, well, look how long it stayed oversold back in this pump and then continued to pump, even into it. So moving on to one of the biggest indicators that I think what we have to pay attention to is this pi cycle top indicator. And yes, it's very possible, even if you go back here, you could see that we do have multiple tests on the bottom EMA. And it's only really once we break the previous high and break that EMA, do we see fireworks to the upside. Now, of course, history doesn't play out exactly the same. I'm not expecting this to play out exactly like all previous cycles. In fact, I don't think it will, simply because we have the institutions. But you could see right here, we come down to the bottom EMA, the pi cycle, Bitcoin gets bought up. We come down to the bottom of the PM, okay, we fell, what did we fall below it, okay? We came down about what? Oh, an extra 3%. My goodness, the world is crashing and everyone's dying and it's falling. No. And then institutions or whoever, somebody buys it up. And look what we're doing right now. And what's happening is this bottom EMA is leveling out and we're bouncing around in this area. And as soon as you break that previous all-time high, you could see that the next area of interest is almost around $90,000, which, by the way, shout out to Kevin Svensson if you've been following his parabolic, advance. That's basically the target, right? So in the short term, yeah, it's going to cut you up. It's going to chop you up, especially if you're using high leverage, not suggested. But if we zoom out even longer to the Pi cycle, which, by the way, this has been an on-running indicator essentially since the inception of Bitcoin. We have data going all the way back to 2012. In no instance did we ever have a top before at least minimally breaching the top of this 350 DMA, which is the top, the purple line right here, right? You can see right here, we break above it, okay? And, obviously we continue. We break above it and we continue. Over here, same thing. And if you want to zoom in here and say, oh, well, what happened here? Okay, well, technically we still broke above it. And really all this was a mid-cycle correction. Yes, it sucked to have that drawdown. Don't forget, this was COVID. Okay, so this was a black swan. I think we would have actually continued sideways and had more constructive pattern if we didn't have that. But, come over here, what did we have? You could even argue, yeah, this was a double top, but we still broke above it and got significantly above it, right? Well, if we come over here, is this breaking above it? Barely touching it, getting above it by what? Maybe a couple $100. So again, if you think we're going to have something like this, fine. We have consolidation through the summer, but it is still showing that we have momentum to the upside. And like Seth pointed out, Bitcoin sells into massive buy walls. Whales are filling their passive bids. Look at these buy walls. Every time the price dips, these dips are getting bought. He says, I'm just seeing massive bids. I can assure you, rich buy low, sell high, poor buy high, sell low, and remain sidelined. So you're going to hear a lot of people coming out, a lot of bears, a lot of analysts saying, I told you so, that's it, it's a triple top or whatever, we're going down to 35K and lower. I just don't see that in the cards. In fact, if we just have a simple look at the CBBI historical chart, which, by the way, combines multiple indicators, Pi cycle indicator being one of them, okay, you can see that we have not even come up to any of these levels. In all previous instances, we have at least broken above where the price was, right? And probably topped out around, somewhere. This was a mid-cycle top between 87 to, I'm not sure. Have we ever actually gotten to 100? I think we got to, we did get to 100 right here. Okay, so that would be like ultimate extreme, probably sell everything. And at the peak, where were we at right here? About 80, 82? Okay, so again, I think that what's really happening is that a lot of people are not understanding that the game has changed. The institutions are now involved, and this is not the same game that they are used to playing. So I just wanted to make this quick video for you guys. By the way, if you do like quicker videos like this, please slap a like. It helps to push this video out to more people. But at the end of the day, is Blackrock shorting? No, they're not. That would make absolutely no sense. And yes, I'll agree that they are a profit-driven company. That is 100% absolutely true. However, they do have a very big ego, and they're not going to launch an ETF only for a few months later to crash the price to then wreck all of the people that just invested in the ETF. That is just not something they're looking to do. And most people are attracted, let's be honest, to price increasing, which would have more allocation, which therefore would increase their profits for their holdings, right? So that is just a crazy theory. If you have some kind of proof or evidence, you can drop that below and I'll just say I'm wrong, although that sounds insane to me. I think ultimately what we're really just seeing right now is more consolidation, right? We have all these different indicators that we've looked at for many, many years on the channel. There's nothing that's screaming that this is a top. Now, yeah, there are some levels that if we do start to fall below it, then we have to accept the fact that, okay, now we have evidence in the charts that's saying this is over, but right now it's just pure speculation and nothing has changed outside of the fact that we have been very, very bored out of our minds and there has not been much real price action going on really in the charts right now. So ultimately, guys, that is really it for me today. I just wanted to make this quick update for you guys. If you do want to learn how to trade, check out these tutorials popping up right here, right now. I think if you're using lower leverage, like 3x or something like that, you could potentially have some very, very nice setups for some trades. And obviously, I do tell you guys if you're interested in how to do that. But until next time, guys, don't stress it. This is just business as usual. And yeah, until next time, stay crypto. And of course, peace out.